You're listening to Uranium Spotlight on Tuesday, November 19th, 2024. Brought to you by Purepoint Uranium Group, your exploration partner in the most prolific areas of Canada's Athabasca Basin. With a collaborative investment model on district-scale projects and validation from industry leaders Cameco, Orano, and ISO Energy, Purepoint is investing in Canada's uranium future. And now your host, Chris Frostad.
This week on Uranium Spotlight, Russia restricts its uranium exports, driving up the spot price. The U.S. unveils its plans to triple nuclear power by 2050, and Niger cuts its colonial ties. Closing the week at $82 U.S. per pound U3O8, the uranium spot market showed significant activity last week, with 8 transactions completed between Monday and Friday, driving notable price movement. Early in the week, offer levels began to stabilize, bolstered by emerging demand and mounting concerns over production issues. However, the real catalyst came Friday when Russia announced temporary restrictions on exporting enriched uranium to the U.S., sparking market-wide uncertainty about potential delivery delays, especially heading into 2025. The week began with 4 spot transactions on Monday, pushing the price up 50 cents to $77 per pound. 2 more deals on Tuesday added another 50 cents, bringing the price to $78. While Wednesday was quieter, buyers remained active and the price surged $1.50 to $79. On Thursday, the market stayed steady at $79 until a late transaction broke the $80 mark. Friday started calm but shifted dramatically mid-morning as the Russian announcement spurred heightened demand and urgency among market participants. By the end of the day, the spot price leapt to $82 per pound, closing the week up $5.50 from Monday. A late deal even settled at $83. Meanwhile, the term market remains subdued with limited new demand. A U.S. utility is reviewing offers for up to 1.5 million pounds for delivery between 2026 and 2030, while other utilities explore off-market discussions amid concerns over supply disruptions. Russia's decision to restrict enriched uranium exports has sent ripples through the uranium markets, with significant implications for U.S.-focused investors. The move, which blocks sales to the United States, is seen as a direct response to the U.S. ban on Russian uranium imports earlier this year. News of the restrictions pushed uranium bids for November 2025 delivery up by $4 to $84 per pound. This development highlights the geopolitical tension reshaping uranium markets. While some U.S. companies can still access Russian uranium under Department of Energy-approved waivers, these exceptions are limited. U.S. utilities, which traditionally maintain robust stockpiles, appear prepared to meet immediate demand. However, concerns are growing about whether they have secured enough material to cover future needs, especially as domestic and Western production remains years away from scaling up. The full impact of Russia's restrictions on future supply chains is unclear. While current contracts with U.S. utilities and resellers are expected to be honored, Moscow has not clarified how future deals might be affected. This uncertainty has prompted hesitation among market participants. Jonathan Hines, president of uranium consultancy UXC, observed that many sellers have backed away from making offers at the moment as they assess the impact. Russia's importance to the global uranium market cannot be overstated. Last year, it supplied 25% of U.S. nuclear fuel needs and produced 44% of the world's enriched uranium. This reliance highlights the challenges for U.S. utilities and investors as the market becomes increasingly divided. John Campaglia, CEO of Sprott Asset Management, expects uranium prices to climb further, saying $100 per pound is very achievable on the spot market, citing inelastic demand amid supply constraints. Meanwhile, the Biden administration's efforts to boost domestic uranium production are in their infancy, with new enrichment facilities planned, but no new mines recently brought online. Some analysts suggest Russia's move is more symbolic than substantive, as companies with waivers are likely to continue receiving supplies. However, without explicit details from Moscow, this remains speculative. The broader context underscores the ongoing bifurcation of global uranium and nuclear fuel supplies. Kazakhstan, the world's largest uranium producer, maintains close ties to Russia and China, complicating efforts by Western nations to secure reliable sources. With Russian imports largely off limits, attention is shifting to Canada and Australia. Yet Australia's state-level restrictions on uranium mining leaves Canada to shoulder much of the supply burden for Western markets. For uranium investors, these developments present both risks and opportunities. Rising prices reflect tightening supply and growing demand, particularly from Western utilities seeking stable sources. However, market volatility and production uncertainties persist. As the East-West divide continues to reshape the uranium sector, investors must monitor how these dynamics evolve, with Canadian producers well positioned to fill the emerging gap. Despite ongoing uncertainty about uranium and nuclear fuel supply chains, the United States is forging ahead with an ambitious plan to triple nuclear energy capacity by 2050. The Biden administration has unveiled the first detailed roadmap for this goal, positioning the U.S. as a leader among the 31 countries that have pledged to triple nuclear power production. This plan has significant implications for uranium markets, signaling sustained demand growth over the coming decades. The U.S. strategy calls for adding the equivalent of 200 modern reactors through new construction, plant restarts, and upgrades. In the short term, the goal is to achieve 17% of this capacity, approximately 34 reactors, by 2035, followed by steady growth of 15 reactor equivalents annually until 2040. Beyond that, the pace is expected to accelerate. For uranium investors, this timeline suggests a prolonged and increasing need for nuclear fuel, which could positively impact prices and equities. The plan also emphasizes leveraging advanced technologies like small modular reactors and microreactors, which offer scalable and cost-effective energy solutions. Up to 65 large-scale reactors are planned for new sites, while retired coal plants may be repurposed to host reactors, utilizing their existing grid connections to add the equivalent of 175 reactors. Political continuity may bolster this initiative, with President-elect Donald Trump signaling support for nuclear power through campaign remarks and key cabinet appointments. A bipartisan consensus on nuclear energy could ensure policy stability and reinforce investor confidence. This detailed roadmap marks a pivotal moment for nuclear energy and uranium markets. With U.S. driving global expansion, the sector is set for sustained growth, creating significant opportunities for long-term investment. Niger's government has invited Russian companies to explore and exploit its uranium resources, signaling a major geopolitical shift. The mining minister highlighted this realignment by stating that since France does not recognize Niger's current government, it's implausible for French companies to continue accessing the country's natural resources. This move underscores Niger's pivot from its colonial ties with France to stronger alliances with Russia and its partners following up last year's military coup. For Western mining companies, this raises questions. Will Niger require recognition of the junta's legitimacy before granting permits? If so, this could block Western access to Niger's uranium reserves, further straining supply chains. Historically, Niger has been a key player in the uranium market, supplying 15% of France's and 25% of the EU's uranium needs. However, these geopolitical shifts and recent actions by Niger's government make it unlikely that any of this supply will reach Western markets in the near term. This development adds to the ongoing narrative of geopolitical instability, disrupting uranium markets while also reinforcing the growing bifurcation between East and West. For investors, this situation in Niger highlights the volatility in uranium supply and the potential for rising prices. As markets adapt to these constraints, understanding these dynamics will be critical for navigating uranium equities. Global Atomic has shared some promising updates on its Dasa project in Niger, which stands out as the highest-grade uranium deposit in Africa, second only to Canada's Athabasca Basin. Dasa is set to begin commercial production by early 2026, and the financial wheels are well in motion. The U.S. Development Bank, currently in financing discussions with Global Atomic, has signaled its intent to approve a $295 million debt facility. This would cover 60% of the project's costs, with approvals expected by early Q1 2025. CEO Stephen Roman expressed confidence in the bank's timelines, emphasizing the alignment with Dasa's anticipated 2026 deliveries under offtake agreements with American and European nuclear utilities. Meanwhile, the company has raised $40 million through an oversubscribed public offering to maintain momentum on the project until those funds are secured. On-site, things are moving fast. Earthworks and civil engineering of the processing plant are well underway, and mining ventilation systems are nearing completion. Housing of the 400-person workforce is expected to be ready by early next year. Outside uranium, Global Atomic's zinc recycling joint venture in Turkey is thriving. Rising zinc prices and steady electric arc furnace dust supplies mean the plant will run at full capacity through the end of the year, boosting cash flow. This blend of high-grade uranium development and cash-flowing zinc operations positions Global Atomic as a unique play in the energy and metals market, delivering for both shareholders and nuclear power customers alike. And that wraps up your Uranium Spotlight coverage for this week. For more news and events from the world of uranium, please tune in next week to Uranium Spotlight.
You've been listening to Uranium Spotlight, your weekly podcast dedicated to delivering the latest news and events shaping the uranium fuel market and its critical role in the global energy landscape. Brought to you by Purepoint Uranium Group. Purepoint actively operates a portfolio of advanced uranium projects in the world's richest uranium district and has established partnerships with industry leaders. While our passion for this subject is undeniable, it's essential to clarify that the information presented here is not investment advice. Instead, our goal is to offer an unbiased and comprehensive review of recent events that could impact uranium prices. Join us again next Tuesday for Uranium Spotlight.